Good morning. Today is Wednesday, March the 22nd. The time right now in Singapore is 11:14 in the morning. And overnight on Wall Street, it was all pretty quiet because the market was basically waiting for tonight's FOMC meeting result. We all know that the FOMC actually started yesterday and it will end today in Singapore timing at 2 a.m. Singapore time. Technically, it's on Thursday morning. The FOMC will decide on the rate hikes amount if and when they decide to actually hike. So this market here has a bit of a mixed reaction to what the Federal Reserve may actually do. There are four possibilities here. One, market mostly expected a hike of maybe a quarter point. It means 25 basis point. This is in contrast to the beginning of the month where the market was expecting a 50 basis point rate hike or 0.5%. But after the turmoil that we saw over the last couple of weeks, the market now has revised their forecast to expecting the Fed to only increase by a quarter point. Now, the other outcome is that the Federal Reserve may actually pause. So what are the odds of that happening? Of course, if the Federal Reserve actually pause the rate hike, it means to say that there's no rate increase, then the market initial reaction as far as equities are concerned is likely to have a knee-jerk rally. But if you look deeper into the reason behind why the Federal Reserve decide to pause, then it could signal that the problem that we are facing or we are seeing so far is a lot more serious than meet the eye, to the extent the Federal Reserve has to stop the rate tightening. So if you look at it from this angle, if there's going to be any initial reaction to the upside, it is basically, to me, a selling opportunity. Okay, the other possibility is that the Federal Reserve basically hike 50 basis point. Of course, that will cause the market to come off. Okay, so because the market right now do not believe the Federal Reserve have the luxury to keep on continuing rate hike without taking into account the damage has done to the banking sector. So that possibility is actually not very high. Now, the other not very high possibility is the Federal Reserve actually cut rate. Okay, so that means if the Federal Reserve actually cut rate, which has very low probability right now, that will signal the problem is a lot more serious than we believe. Okay, that prompted the Federal Reserve to actually reverse the rate tightening policy. So that could be signaling something more serious. So that will cause equity market to sell off big time. So these are the four possible outcome of tonight's FOMC meeting. One is that they hike quarter point. One, they hiked 50 basis point. And then third, they paused. And fourth, they cut rates. So all four has possibilities here, but the most likely outcome will be a quarter point hike. Okay, so we will have to see how the market reacts. The market has already gone ahead of itself by actually buying up equities in expectation that the Federal Reserve is going to do a pause. Okay, so let's see what happens. Over in S&P 500, we can see that, like I said, U.S. equity has been rising of late this week after the turmoil that we've seen over the last week itself. So the market right now in the S&P 500 is back above 4,000. Highest traded last time was 4,009, and the market right now, if it can continue to edge higher, will probably challenge the March 6 high at 4,078.5. Okay, so I have a bracket of prices in which I'm actually eyeballing, in which I think selling interest may actually emerge from around here, 4,056 to 4,094. Okay, I've actually placed my order to sell if the market actually reacted to the upside. Okay, over in Nasdaq, I think the market has been the firmest of all the major equity index. The highest traded last night was 12,762.5, very close to the year high, which was last traded on February the 2nd at 28,881. So there is a possibility market may or may not challenge this high, and then let's see what happens. The key, I think, will be on Nasdaq, because Nasdaq has actually been the most bullish this round. Okay. Over in Asia, we can see that the Nikkei, the Japanese market remain closed for holiday, and we will look into Hong Kong for Hang Seng Index. There has a bit of a rebound in reaction to Wall Street firmer closing, but you can see this rebound is very tentative. I think the market has not hit bottom yet. There's a possibility the market may actually slide back to around 17,400 to 18,100 range. Okay, let's watch out for this possibility here. Over in mainland China, the CSI 300, which is a major equity index, is also rebounding right now, falling short of its my target at 3,864 to 3,920. So we can say there's a bit more room to the downside, but let's see whether this rebound will amount to anything. But so far, I think they are not. They are basically reacting to what's happening overseas. Over in energy market, you can see the crude oil prices continue to rally. Last night high was $69.72. This is a huge reversal of fortune because last week you can see that crude oil actually went down to the year's low at $64.33, and now this rebound here has unfolded in a three-wave, and it has hit my target more or less. I think the market may be prone to profit taking. If we get a profit taking and price slides back, I would love to buy anywhere between $66.40 to $67. So this will be my area of opportunity. I think the market, if it can stabilize here, has a chance to actually target $73. Okay, let's see whether this actually pans out. Over in gold market, we can see early morning this time yesterday, gold market was actually at the high for the year at $2,009.84. But of course, this did not follow through in London and definitely did not follow through buying in New York. We can see the prices actually retreat. As we can see, these are basically profit taking. And if this profit taking resulted in a price going back to around $1,884 to $1,900, I think that will be a good area to pick up gold again, because I think the challenge of 2009 will be done in very short notice. Maybe in a couple of weeks time we can see back this price. Okay, so this pullback will be a buying opportunity in my opinion. Now as the gold prices shot up to the year's high, silver did not have the same fortune. The year high is way back here. So we can see silver is lagging behind gold, and the highest traded was $22.72. And of course, the pullback is also equally shallow because the attention has been on gold and not so much on silver. And if the silver prices manage to pull back to anywhere between $21.30 to $21.64, I think that will be also a buying opportunity because we can see a cluster of prices just before the market went up to $22.72. Over in the dollar index, we can see the dollar continue to paddle backwards. And because of this confidence right now in the US banking system, the dollar is not necessarily the best currency right now. The best currency right now, as most people reacted to the banking crisis, is the Japanese yen. So we can see dollar right now is pulling back. But by and large, in a world whereby there is no so-called good currency to plug your money in, I think eventually the dollar will have to come rolling back at some point in time. So if this pullback result in the dollar index going back to 101.15 to 101.80, that to me is a buying opportunity. Unfortunately, I have already bought near the low here as the market went down, and I was hoping yesterday that if the market gave me a chance to rebound, to get out of my existing position, then I will do so and then reposition my long at a lower level. But that did not happen. So now I will have to basically bite the bullet and see whether I can buy some more near this range of prices. Okay. Now, in terms of major currencies other than the yen has benefited tremendously from the turmoil in the banking sector. Sterling seems to be doing pretty well. The high traded was 122.85, but the market since has pulled back to 181, 121.80 so far. So we can see that there's a bit of a pullback. To expect the sterling dollar to pull back all the way to 120, which is my ideal price to buy, may be a little bit unrealistic. So maybe we'll just have to watch. I placed my order nonetheless. Nobody knows what kind of volatility we may see upon the FOMC rate decision. So I'm just placing my buy order there just in case the market actually have a chance to pull back all the way there. Okay. Over in euro versus the dollar, we can see that the euro has actually went up to 107.88, and it hits a pocket of prices which I believe to be vulnerable. This range of prices is 107.75 to 108.35. This bracket of prices is, to me, is where I think the likelihood of selling interest returning is going to be pretty good. And actually, unfortunately, I've already short, and I intend to sell some more into this bracket of prices if we get another kick up higher. Because so far, there's no sell signal that is telling me the market has already picked up. Maybe we can see another spike higher, and that will give me another chance to anchor at a better price. Okay. Over in the Aussie versus the dollar, we can see the market is really not going anywhere. The market is basically consolidating. Initially, I thought the market would go up to 0.6740 before coming down to 0.6563. So, but that did not happen immediately. So the market is basically just consolidating, not giving us any kind of clue as to where it wants to go. Over in dollar versus the yen, like I said earlier on, the safe haven currency, which is the Japanese yen, right now is the flavor of the month. So that means the dollar versus the yen will have to see lower prices going forward. Yesterday, we have a bit of a rebound in dollar yen from 130.54 all the way to this morning high of 132.70. So basically, I do see that if the market can actually edge a little bit higher, 134 or to 135, that would be to me a selling an area in which I would love to do some kind of selling, but because I think the turmoil in the banking sector is not over by any means, so there is a chance that the yen may strengthen further based on this tension in the banking sector. Over in the dollar versus Canadian, we don't see much of activity, very similar to what we saw in the Aussie versus the dollar. So basically, it's consolidating. I have already shorted the dollars CAC, but yesterday we saw the market pull back very deeply, so now it's pulling back again. Hopefully it will like struggle all the way to 136 to allow me to exit my position, but by and large this position is already risk-free because I have moved my stop to break even. So regardless of what happened, I will not lose money on this trade, although there is not going to be anything spectacular. Okay, over in the Bitcoin, we saw Bitcoin actually rally to 28,567. Okay, that is on Monday. Okay, so yesterday there was no new high. There was an early, there was a there was an early attempt this morning to actually go higher, but it's nowhere near the 28,567. So if this continues, there is a risk that the market may decide to take profit and the market may see a pullback. If that's the case, my ideal price to actually position long is somewhere between 23,000 to 24,000. So the market, if ever goes so deep, a correction, that will be a great place to actually anchor long. Okay, so we can see that Ethereum also have a bit of a pullback. The high also traded on Monday at $1,846.50, and that the market did not come back. And this morning we have a bit of a challenge, but no, this was late yesterday morning, late last night or early this morning. There was a late challenge. Highest traded was $1,839.90. It did not quite make it, so there's a good chance it may actually pull back. Ideally, we want to see the price pull back to 1,550 to 1,610. So this area is actually my area of preferred buying if the market ever go that deep. Okay, so just be aware that the rally in cryptocurrency, in particular Bitcoin and Ethereum, is not caused by safe haven buying, because cryptocurrency is anything but safe. It is actually one of the most risky product out there. So this rally in cryptocurrency cannot be related to safe haven buying, like what we saw in the gold market or even the dollar versus the yen. Okay, the yen. Okay, so for those who believe that cryptocurrency is benefiting from the turmoil in the banking sector, it is not true. The reason behind the rally in Bitcoin and Ethereum is largely due to the instability of the stable coin. So right now, a lot of institutions have actually started to get out of their position in stablecoin and park their money into the main coin itself, which is Bitcoin and Ethereum for now. Let's see how this thing pans out, because this crisis in the banking sector is by no means over. We have yet to see the eye of the storm yet. Okay, so do be aware. Now, this morning, today, the focus will be on the FOMC, which is going to happen at 2 a.m. Singapore time. So if you're going to be staying awake to watch the how things unfold, that will be the timing. In the meantime, take care and be safe. Bye-bye.